What's up, investors? Ken here from Dyslexic Investor, and yes, we're going to be looking at Tesla again. This is Saturday morning at January 11th. Friday just closed out. We kind of see here a little bit of down tick here in Tesla, not touching the 5 exponential moving average yet. But there's an article that came out on the 4th, so nearly a little over a week ago. Let me pull this over here. It's on CNN Business, and it kind of gave a nice little tick about the overall movement of Netflix, of Tesla here, showing on how this rally has been just literally been rocket fuel for people in the stock. So if we go here on the chart here, we're going to look here on the daily chart. Ever since its last quarter in October here, it's just been riding higher, literally jumping into another dimension. This is how fast, this is how crazy momentum, and this is basically what the article highlights and explains extremely well, probably much better than I could ever do, is about the short selling. So a lot of this information comes from the S3 partners. So these guys are a firm that helps mutual funds, huge hedge funds, get very accurate data to the minute, sometimes even the day, of what the current short position is, who's in what fund. They have the capability to do that, and a lot of people pay them a really hefty fee to get that information. But they came out and they said there was nearly $8.4 billion lost in short positions to this monstrous run. So that's a lot of money. So that's where you see a lot of this volume. This is the blue down here. Let me show you better on this chart here. So this is the green little bars down here is volume. So the yellow line here is what the average volume is. So we're looking maybe at 11 million, but it traded nearly 3 times the amount to like 30 million both those days after the quarter. A lot of that was, of course, people buying, but people were buying the stock from people who were selling it short because they have to buy it back, so they have to close the short position, and that just created such a huge spark in the stock, and it just ran up from there. Normally you see on a huge uptick, it kind of comes back and kind of trades a little bit over here, sideways a lot more until something else comes out, but it literally kind of came back a little bit and then it just took off again because it just had this non-stop momentum of people like, oh, I'm a believer now, like Jim Cramer. People, they're like, oh my god, I have to sell my short position. I think they actually can make money this quarter. They actually made money this quarter. I have to get out, blah, 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 blah. Whatever the reason is just shown here on the chart on how aggressive a lot of the ride up has been. And if you don't have the stock yet, you need to, from my God-on opinion, is you need to wait for it to come down. Maybe trade. This is where I have my marker at 428. I don't know if I'm going to get that price. I have a nice marker here, just a tad over 500 or under 500 to see on we move there. I still have my 671 price target up here. So looking at that, let's go back to the article here, and this is where he does a great example. He said, but Apple is a much larger company, and the short position are there as much, but they're a much smaller size. So comparison, the short seller accounts are about 21% of the Tesla stock sales currently, and then compared to about 1.5% for Apple shares. So yeah, we're not comparing apples to oranges, but we're comparing Apple to Tesla. It's still, there's this huge negative look at Tesla, and also the S3 dude says that some short sellers have been taken out, which you can see with the huge run, but many of the long-term shorts, they are sticking with it no matter what the price moves are. So that being said, there's going to still always be the negative side to Tesla, because there's always going to be someone that is just going to say that I'm not doing this, blah, 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 da, 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 da. And this is another great little snippet here. In just the first 2 days of trading in 2020, the shorts lost more than $700 million, according to S3. And some short sellers, so basically about 36% of the shares were being shorted in May. So let's go look at the chart here. So May is right about here. So people were shorting here. So 36%, and now we're at 21. It's very difficult, I guess, to short at this location because it's literally hit like an all-time low. But that, with this quarter too, probably people added on to their shorts. So the way a short works, they have to pay a premium-ish to hold that short. So they're paying, I don't know, they didn't really break down the premium in the article, I don't believe. I don't remember seeing on what premium for them to be able to hold the stock short. No, I don't see it here. So normally you would have to hold a premium of like 3, 5, 6, 7, 8% on top of having to hold that large sum of being short. So again, being short, there is no limit. It can go from 0 to 10,000. So shorting is very difficult because there's the infinite amount of going up. That being said, if you're long, it only goes, the bleeding stops at 0. With shorting, it doesn't. The bleeding continues to go, your arm falls off, and everything bad happens. So shorting is a much different beast, and it's not really made for everyone. That being said, I think it was a great article. I'm going to put it in the link down below. But basically, a lot of the shorts, about 15 to 16%, have been removed out of the stock, which is great for the long-term haul. But we have the earnings coming up at the end of the month on the 29th, potentially, because it's still a question mark, so it's not 100% sure it's going to be on the 29th, but we'll hopefully get closer to that date and we'll figure out that time. But looking forward to seeing what happens there, and this is going to be a pretty significant quarter for them to even prove more to the shorts of what is going to be happening. So it's just crazy seeing this chart here, right, guys? Again, guys, thank you so much for watching. This is Ken from the Dyslexic Investor. I wish you guys a great day, and don't forget to like and subscribe. Peace.